getting a mortgage when you're retired. So I recently spoke with the gentleman, Patrick. Hey, Patrick, this one's for you. And we were talking about getting a mortgage when you're retired and the fact I hadn't done a video on it. And I think it's important, so many people are retiring. We get a ton of questions, and I'll see in comments like, oh, well, I can't get a mortgage because I'm retired. And I'm like, why? We do a ton of mortgages for retired people. I would say it's probably 30% of my business. And we see people moving from state to state, all these fun things. So today I'm going to talk to you about if you're retired, how to prepare for getting a mortgage, as well as some of the questions that I get that I think it's important to answer so that you don't even need to worry about it. So the biggest question I get, and it's usually phrased like this. Well, Jen, I'm 95. Are you really going to give me a 30-year mortgage? Yes. Yeah, sure. If you want one, absolutely. Absolutely. So it's very important that you guys know we do not discriminate. Lenders are not supposed to discriminate. You could be 110 and if you qualify, 30-year mortgage. Yeah, there's no reason not to, and it's interesting because people are like, well, I won't live to pay it off. Okay, people die every day, and it's not just because of age. People die because of heart disease. People die because of COVID. People die because of getting hit by a bus. People die. There's no way to know exactly when you're going to die and tie your mortgage to it. And that's not our responsibility of lenders to be like, I don't think you're going to live to pay this one off. Not our responsibility, okay? And not what we should be doing. If you're talking to a lender who's telling you they will not give you a 30-year loan because of your age, that is a red flag. So that's the most important thing. Now, the next question is usually, why would I want a 30-year mortgage? Well, so one of the things that I see a lot is that retired people are on fixed incomes, right? You're on fixed incomes. So having the lowest payment possible is often something that gives you the best life possible, right? You don't want to be house poor when you're retired. That's like the worst because you're just trapped in your house all day. You won't have money to go do anything. Want to play golf? Tough. Want to go to the movies? Not happening. Want to join a club and play tennis? Not going to happen. So it's important that you think about your lifestyle overall instead of just going into the mindset of, oh, well, I think I'll live for 10 years, so I should get a 10-year mortgage. No, you should look at the payment that's going to make your life the best. Right? This is your life. Live it. Have fun. You guys are retired. Oh my God, you should have fun. Please, you have to have fun so that people like me have hope for our future. So yes, think about the payment in terms of what will fit your lifestyle. Don't go house poor in retirement. Okay. The next thing I get, and this is just more of like a cautionary thing that I want to bring to your guys' attention. I'll see someone who's retired and they'll be selling their family home, right? They lived in it for 30 years. And we see a lot of this in California, where maybe they bought it for $200,000 and it's worth $800,000 now. And what I see people take all the money they make from that and put it in a new house. And I'm like, wait, guys, you don't have any savings. You don't have a 401k. You're retired now without a safety net. Maybe instead of putting all that money into a house, you should have some savings. You should talk to a financial advisor about, 20, 30 years from now, how you're gonna live your life. Because what happens a lot is people put all this money in the house and then 5 years later I get a call. Hey Jen, yeah, we need to take money out of the house because the kids had problems and we had to give them some money. We don't have any money now and we had to put it on credit cards, because parents are always trying to help their kids. So your kid gets in some trouble. So you max out your credit cards because you have no savings. Well, you're retired. You don't have the income that's suddenly going to jump up to magically pay off those credit cards. So it's very important to be mindful of your full future instead of just going into the mindset of, I want the smallest loan possible. Yeah, a small loan's great, but a small loan's even better if you have savings and retirement set aside for emergencies and to support your lifestyle. Okay, so those are the two big things I just want to lead into with this. Now, the next thing is as a lender, what type of documentation am I looking for? Okay, here we go. Get a pen and a piece of paper. If you get Social Security, I'm going to be looking for your Social Security award letter. You get it every single year. It's what tells you how much you're going to get. If you don't have a paper copy, you can go online to the Social Security Administration and get a copy there. Now, if you can't do that, then I'm going to be looking for a 1099. The 1099 is what they send you at the end of every year for your taxes. So if you have the 1099 but not the award letter, it's okay. If you have the award letter but not the 1099, that's okay. I usually want one of those. Okay, now in addition to that, I'm gonna want proof of deposit. So I'm gonna be looking at your bank statements to see that Social Security being deposited every single month. Now, there's a lot of misrepresentations about whether or not lenders can gross up your Social Security. So what that means is grossing up is like if your Social Security is $1,000, if I was grossing it up, I would be treating it like it's $1,250. In order for me to do this, it has to be non-taxable. Not all Social Security is non-taxable, okay? Some people have to pay taxes on their Social Security. In that case, I could not gross it up. I'm just telling you guys this because I see it a lot where someone's like, well, this lender said I could do more. And I'm like, well, that's great because they're grossing up your Social Security, but your Social Security is taxable. So that's going to get denied by an underwriter. So very important to recognize whether or not you are paying taxes on your Social Security. If you file tax returns, you'll see that there's a box for non-taxable and taxable in regards to your Social Security. If you're not filing taxes at all, well, then it's not taxable. If it's the first year you're getting Social Security, we are not going to be grossing it up because we don't have enough information to determine whether or not it's taxable. Okay? Pensions. Yes, pensions. Pensions similar. I'm looking for either that 1099 or the pension documents that lay out what you're getting. And sometimes people will be, I got my pension 30 years ago. Like, why are you looking for this? Okay, they're always going to have a cost of living adjustment. I don't know any pensions that don't send out yearly a cost of living adjustment. If you guys have one, let me know. But there's usually something going out yearly that tells you guys what your monthly benefit is. Once again, I'm gonna look to make sure it's being deposited. So make sure it's being deposited into one of your accounts. If you have it being deposited into your child's account, that's gonna cause a red flag and confusion. I don't see a lot of that, but I do see some of it. So it's important to note with any of your retirement income, have it deposited into your account. Yes, your account. Okay. Dividend and interest income. Yes, that's something that we look for with retired people as well. If you have a lot of assets, you may be receiving dividend and interest income. And what we're gonna do is we're gonna do a 2-year average on your tax returns for the interest and dividends. Now, an important thing to note is let's say you have one bank account and that's where all this income's coming from. If that's also where your down payment's coming from, I can't do the interest and dividends anymore because it's not an accurate gauge because you're removing a big chunk of money. So I would usually say, perfect world, down payment is coming from an account where I am not counting interest and dividends, okay? If I need them to qualify. You know, in a perfect world, I don't. In a perfect world, your pension or your IRA distributions, 401k distributions, Social Security, you know, VA disability, whatever you have is enough. But if I do need to count those assets, it's important to note that if you're materially changing how much money is that in account, oh my goodness, how much money is in that account, I can't use the interest and dividend because it's not an accurate representation. Okay. So what's another thing? 401k and IRA distributions. Now, if you're taking out $1,000 this month, $10,000 the next month, $4,000 the next month, $6,000 the next month, I can't use it. No, because it's not consistent. Underwriters are looking for consistency. So realistically, what you want to do is if you're getting ready to buy a house, and you're pulling all these different amounts and you're definitely living off your 401k or IRA, like if that is your main source of income, set up a consistent distribution. Yes. And then the key thing is going to be when I'm looking at that consistent distribution, I'm going to be making sure there's enough money in the account for 3 years. So sometimes people will be like, oh, well, I'm taking $10,000 a month. Won't that work for income? And I'm like, no, because you only have $80,000 in the account. So in 8 months, you're out of money. So it's not going to count as income. Okay. Now, I know a lot of this can feel overwhelming and confusing. So if you have questions, always reach out to me. I'm always happy to clarify. But the key thing in all of this is that just because you're retired, you shouldn't feel like it's going to be any harder to get a loan. You're just getting paid in a different way. That's it. That's all that's happening. And lenders do not discriminate based on age. It would be illegal. So that's important to note also. I think that's the big bulk of it. If I missed anything, of course, let me know. I'm always happy to go into detail further. But just from where I sit, the biggest things are, will you do a 30-year fixed? Watching people put all their money into a house and not have any money left over, that's a big thing. If you guys are going to be selling a house and making a big chunk of change, I strongly advise you, if you don't have a financial planner, talk to a financial planner. You really need to be thinking 30, 40 years down the line. People are living longer every year. So you really don't just throw it at a house. And then what income documents to have prepared. Now, the other thing I get sometimes is, well, Jen, I'm not techie, so I'm a little bit worried about this. And what I have to say is, my retired clients actually are sometimes better than my 20-year-olds on the system we have. Like, it's amazing. So don't feel like because you're older, you're going to have a hard time getting a mortgage. Like, it's the way technology is set up, it is super easy. And I really do feel like my retired clients are better at technology. But if you feel like you can't, we always have ways around it. So we FedEx documents to borrowers for them to sign. We recently did this with a borrower who was, he had vision issues. So we made sure that he could see it. And, one of the gals on my team sat on the phone and went through it with him. And, there's lots of ways to make sure you're taken care of. So I really don't want you guys feeling like there's no way you can do it, because that's the thing I hear the most is, well, I'm retired, so I just can't even qualify. Not true. Not true. So thank you for watching. Questions?